Hello, everyone. Mike and Corey here today. And when the market starts hitting all-time highs, people start asking, are we in a bubble? Are we in a bubble? Every time it hits highs, are we in a bubble? Sometimes we're in bubbles and it comes back down, but then it hits highs again. So were you truly in a bubble if it hits highs again? I don't know. Corey's going to talk about tech bubbles today. And one offshoot of bubbles is when things seem high priced, you start to see some strange things happen. And I'm going to talk about Kohls, that stock, that company where you go buy things, and I really think it's a credit card company hiding in a department store. But I'm going to talk about the Kohls stock, and then something very exciting. If you're a Tesla person that charges your car, the Tesla diner. Are they going to take away restaurant business? I don't know. But as we get started, this is a financial education presentation. You must do your own due diligence on anything you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So take it away. Are we in a bubble, tech bubble?
Yeah, let's figure that out together, actually. Let's go through a little information, and I might even let you be the judge, Mike.
Uh-oh.
We'll see.
Uh-oh.
We'll see. So we got somebody sent me this morning with some concern around the question was, is the tech bubble about to pop? The title here, tech is growing problematically big for Wall Street. Well, now let's remember, the index doesn't care. The index doesn't care who the biggest company in the world is. The index is simply following investors and what investors are allocating funds to push those market caps higher. So people making money because Nvidia went from a few $100 billion company to a $4 trillion company is not a problem. Hey. Let's be clear about that. Oh no, people made too much money on Nvidia. This is just so bad. That's not how investing works. People making money because of Nvidia growing quickly is a good result of capitalism doing its thing. But let's go company by company and kind of we'll get a feel for things. Nvidia, you're looking at a $4 trillion market cap. That's the biggest one. We're going to go down the cap scale here. You're looking at a company earning, battle through that a little bit. A company earning about $90 billion a year right now. Because their margins are so high, they aren't trading at any obnoxious price to earnings ratio that you would have seen in the dot-com bubble, but about a 50 price earnings ratio, and their price to sales ratio is a bit elevated because their margins have just gotten so big. Now let's go look at Microsoft. So the next one, Microsoft's actually earning $120 billion a year right now on a market cap of $3.7 trillion. You're looking at a price to earnings ratio. Historically, nothing looks too crazy, but you do have an elevated price to earnings ratio. Bubble? It's hard to say. Was this all a bubble then too? You know, if we're in a bubble now, then it should look a lot different than it ever has before. And Microsoft's not really showing us that. Let's look at Apple. Apple earning even more. Apple earning $127 billion a year on a smaller base of $3.1 trillion. Apple been kind of punished recently. That price to earnings ratio. Now, while Apple's not growing very quickly, we do know that. We could look at revenue growth another day. But you're looking at price to earnings ratio just above 30. Is it rich? Yeah. Is it a bubble? No. Let's go look at Amazon. We're getting even smaller. Amazon bringing you a market cap of only $2.4 trillion, and a leader in cloud and in online retail. $80 billion a year in earnings, which is hockey sticking higher at this point, as you can see on that earnings chart. Actually trading at the cheapest price to earnings ratio really that it has ever traded at, aside from, a moment where it was unprofitable. Look at a price to sales ratio. A bubble would be something totally different than I've ever seen before, and that's not where we are right now. Two more, or a couple more. I'll go quick. Google, I'll skip to the chase here. Price to sales ratio, price to earnings ratio. Google is at a very depressed valuation, the opposite of a bubble. Meta, Does Meta's price to earnings ratio look different than in years past? Not really. On a price to sales basis, it's traded much higher before, so nothing there. Netflix, look at that market cap. It's shot up over 500 billion. Earnings have shot up, but Netflix, I will say, has gotten pretty rich. You're trading at a 50 PE. You're not. So Nvidia was kind of the same, right? But Nvidia is probably 40, 50, 60% revenue grower. Netflix is trying to do 15% revenue growth. So that one's gotten more rich than the others. And Mike, last thing. Here is the forward PE ratio of the information technology sector in blue going back to the mid 90s there. Does it look the same as what we now know as the tech bubble? No, it doesn't. And also, the quality of the companies are a lot different now. So that's really. Oh, Mike, I got to show them this one. Got a bubble though. I do have you one bubble here.
Oh man.
I got you one bubble here, but this isn't going to move the entire index over a long period of time. So Palantir though, if you want to say that's a bubble, then okay, you could point to that one. All right.
All right. Well, that's good because we don't want to be at the upside of a bubble because bubbles pop, things go back down. We want to be cautiously optimistic, riding a wall of worry is what I've heard. So let me show you when things get crazy, what they look like. So I saw this today. Shares of department store Kohls surged 30%. And I'm going to show you the graph because they surged more than 30%. Right now, they're up 32%. I think when we started the show, they were up 38%. And what's most fascinating on this is it was on no news. I mean, no news other than people talking about Kohls out on Reddit, which is, where GameStop and what was it called? The kitty? I can't remember. It's already drawn a blank on me. Roaring Kitty. When Roaring Kitty, and we had these meme stocks just a few years ago. So let's take a look at Kohls. And no, this is not in our book. And no, I would not rush out and buy this. It is trading on heavy, heavy volume. So this is just today. You can see it's surged up to 18 and it's down to 13. So if you were the person that bought it right up here at, well, actually almost 20, you've lost about, I don't know, 30% today. But let's just look at it more on a 5-day basis. And you can see this is a bubble right here on no news. So, we see this happen occasionally with different companies, and usually this is caused by a short squeeze. That means there's a lot of people betting against this stock that say, we think it's going to go bankrupt, out of business, the stock price is going to drop, and then people run the price up, and those short sellers are forced to buy to cover, and then it goes up further. So that's what happened with GameStop, AMC, and I think it was even Hertz did that last year. So stay out of Kohls. Actually, you can go to Kohls to shop. You can go to Kohls to return your Amazon. That's what I do at Kohls. Return Amazon packages. But stay out of Kohls for this stock. Don't touch this thing. It's a mess. And what's it going to do tomorrow? Who knows? It may go back to what it should be at, or somewhere around $10 a share. Another interesting thing I saw today, maybe it's because I have a Tesla, but maybe I get to access the futuristic California drive-in. Wow. Charging stations and 2 66-foot movie screens. Now, here, take a look at this little picture here, Corey. Does this, you see that all the vehicles outside charging? Does this make you want to drive a Tesla? You get to drive into a little drive-in restaurant and supercharger.
Is it Teslas only?
I think so. Well, just so you know, other cars can charge on Tesla ports, right? But obviously, the only people allowed inside should be Tesla.
The Tesla, can you eat there for free? Because I would.
That would be worth it, right? Free food.
That'd be pretty cool.
The Mach-E and all the other electric vehicle people, they have to stay outside. Only the Tesla people are allowed inside. I don't know. I'm just kidding.
They have to park under all the trees with birds in it.
I like this word here. Like, this is a new one, Corey. I have not used this word before.
I love that.
Retro futuristic.
I
Huh.
love that.
So I think that means
Genius.
like what people in the past thought the future would look like. So maybe that's the Jetsons. So anyways, I kind of like this idea. I went to Buc-ee's for the first time, whatever, a month
Oh
or
yeah.
two ago, and that place was crazy. Since when is gas and electrical charging places becoming destinations? I guess now. I mean, before it used to be you just went and powered up and left, but now
Wait,
you
I
want
want
to
to
spend time.
see a couple more pictures. What's the menu like here?
I have no idea.
Are we
I
just
did not.
burger and fries?
Oh, there we go. We got guards. These are the people checking to make sure you're actually
Got it.
driving a Tesla. No, I'm
Got
just
it.
kidding.
Open 24/7.
Uh,
Oh, they serve you in the cyber trucks.
yes, little kids Cybertruck inspired food boxes. Oh,
Okay.
look at this, a robot handing you popcorn. I don't know what could go. Look at this, Corey. Check out this big screen over
I'm
here
in.
to the right.
I'm in.
This is a commercial. This is like, let's see. It says charging only. I only see Teslas in the picture.
I'm in.
The robot waving high. On and on. Maybe this is why Tesla stock is so much higher than any other automotive stock, because, I've never seen such a thing for General Motors or Ford or Chrysler. So Tesla's got something going on here. I got to find one of these in Ohio because I can't make it to California, I guess, where the cool people hang out, to see this myself, nor would I want to drive my car 2,000 miles. So unless I could do it on one charge, but I can't do that. So. All right. Well, that's it for Tesla. Thanks, everybody. Have a good one. Bye.